What's going on, good people? Welcome back to another episode of Trading My Live Account. Today is day number 65. It's September the 12th, 2023. We made some trades today, so let's get into it. Now, first and foremost, before we get into anything, let's talk about the important levels that we have on the chart today. So today we have yesterday's closing price represented by this purple line towards the top of the chart, and that price level is 35,018. Next, coming up below that, we have a zone that was established in the pre-market that'll pretty much play a very important role, as well as the bottom of a trading range that was established by the blue line. So when you take this red zone that we have up here and then you add that in conjunction with the blue line of support that we have below, that pretty much established the range that we traded in all day. And you know, yesterday we were talking about trading ranges and talking about the proper ways to trade them and also the improper ways to trade them. So I pretty much learned from my mistakes yesterday, and lo and behold, when I come into the market today, we get hit with a range again. So I knew exactly what to do, and I want to talk about that today. So let's go ahead and just analyze what was going on in the pre-market. So let's go back a little bit. So let's start the analysis a little bit early during the London session at around 4 o'clock this morning. So after we closed yesterday, we pretty much stayed below yesterday's closing price overnight. And then when the London session opened, we did have a little bit of a downtrend. And that's where I was actually able to establish the actual numbers for the top range of, well, the top level of the trading range that we were trading in this morning. So the top level came from a level of support that was broken through, came back to get retested. So I just drew that level up and extended it across. And then this next level right here was drawn by this swing high that we established right here, and I extended that across throughout the market. And we pretty much traded within that price range. So the top of the trading range will be 34,990, and the lows of the trading range were 34,935. And we pretty much just bounced back and forth, back and forth, back and forth all morning long throughout this entire price range. So when I woke up, I pretty much charted up all of that, and then I came into the market around, I finished my analysis around 8:30 this morning. So once I saw prices hit the bottom of the range and come back up to where they were at 8:30 this morning, we were pretty much coming back into the lower levels of this upper range. So I said, okay, I want to see what the market does when we get here. We immediately sold off and we got rejected. That's a good thing. That's what you want to see. That tells you that the upper range of the zone is still holding up. That's a good sign. So then we push back up, continue up through the range. We test the top level. That should happen. And most ideal scenarios, you should test the bottom level and the top level of a range. So I like what I see right here when I saw that. Now we continue pushing up. But what's really interesting right here is the fact that we have yesterday's closing price not too far away at 35,018. So once we break above the zone above 34,990, we're only 28 points away. And 28 points on the Dow Jones, even in the pre-market, is not really a big move, you know, in terms of probabilities of it happening. 28 points can happen here, there, and everywhere, even in the pre-market. So I had an idea like, okay, the trend is up. We broke out of the trading range. Now we should be moving higher into yesterday's closing price. The only reason I had a little bit of hesitation and I decided to be a little bit more patient and wait for that long trade to set up was because if we go back to yesterday's session, one of the mistakes I made when we broke out of the trading range that we were trading in yesterday at trade number 6, one of the mistakes I made was that I went long expecting for that uptrend to continue, because I was thinking, oh, okay, we had a lower high that got a swing low that got established right here, followed by a higher low, another higher low, and a third one. And then we finally broke out. So I'm saying, okay, I see the signs. But what I learned yesterday was that no matter what the signs may tell you, you always have to respect the trading range first and then respect those signs of bullish activity that you're seeing next. So if you see a false breakout, well, you don't know if it's a false breakout at first, but if you see a breakout to the upside out of a trading range, you always want to be a little bit hesitant to go along with that breakout and think that it'll be successful, because if we were trading within a trading range, more than likely we'll probably stay within that trading range. So that was pretty much the main reason why I passed on that opportunity today, because I didn't want to make the same mistakes and I wanted to come back and correct the things that I needed to improve on from yesterday. So I said, okay, you know what? If I am going long and that's what I want to do, I should go long from lower prices first and foremost. So that means if anything, I should go long at the bottom of the zone. But I also don't want to just put my orders at a random level and say, okay, when it comes back here, it's definitely going to hold up as support. First thing I want to do is see how prices react when they get there. So when I see prices come back down to the bottom of the zone, they found no support right there at all. And as a matter of fact, they pushed right through the zone, came back up to create a lower high. So let's go ahead and mark that up real quick. So we created a lower high right here. And pretty much when I trade a range, this is the exact setup that I look for. Once we have a false breakout out of the range that gets rejected and comes back into the range, the first thing I want to do is wait for that first lower high to get established. And after that first lower high gets established, I want to take the short trade and then I want to hold it all the way back down to the extremes of the zone. And that's pretty much what I was able to do today. So once I saw that first lower high, I went short. I saw prices come back, retest that level, and then they sold off. Now, I think this was a really good improvement from what I did yesterday, because I did have a trade yesterday that was successful when I traded the trading range, but I didn't hold that trade all the way back to where I was supposed to. So let's actually just take a quick look at that for a second. It was on trade 2 right here. So if we read the notes, it says I went long here after seeing a higher low form, but you got to hold range trades to the extremes of the range. And in this scenario, once I saw prices come back up after a false breakout to the downside and make their first higher low, that's where I went long at point number 2. Only thing was you got to hold that trade back up to the extremes of the trading range. In this scenario, it would have been holding it all the way back up to the top level of resistance. So in today's market, I just said, look, let me just make sure I do everything I need to and do everything right and follow my plan the way it's supposed to be followed. So I took the short trade right here and held it all the way back down to the extremes of the zone and took profit once I got back down here to support at 34,940. Now, the only thing that I would say that I could definitely improve on is my entry price. If you look at where I shorted at, I pretty much shorted at the lows of the swing that had been established up until that point. So imagine that none of this over here was present. This is where I shorted from. This was the low for that swing up until this point. And that's usually not what you want to do. Even when you see your perfect setup start to form, you always want to make sure you go short from better prices and higher prices. So what I should have done in terms of my entry right here, I should have been a little bit more patient and waited for prices to come back, retest that zone again. And then as they start to move away, that's when I can short. So I would say that's the one thing I got to improve on. You know, today I made a good decision and shorting from the lows actually was very successful for me. But I could tell you from experience that most of the time, shorting from the lowest prices of the swing is going to lead to disappointment more than it will success. So always keep that in mind. But that was the only trade I took today. You know, I came in, I made a good 30 points. I was happy with that. You know, that's all I want to do when I come to the market. I just want to see what my trading plan is, analyze the market, identify what kind of market that we're trading in, and then see if I can work my plan successfully based on the market scenario that I'm looking at. And if I can do that the right way, I'll take my trade, take my profits, and then call it a day and come back and try and do it tomorrow. So that's pretty much what I had on the docket today. I hope you guys were able to learn a lot about trading ranges and the actual proper ways to trade them, especially when it comes to a false breakout to the upside. You want to make sure you see prices come back into the range, and once they establish that first lower high, then you wait for prices to come back up to a major level of resistance. Then you can take the short trade and short it back down to the extremes of the zone. So hope you learned a little bit today, because I definitely did. I'll be back tomorrow on September 13th, 2023, somewhere between 9:30 a.m. and 9:40 a.m. But until then, you guys, study hard and take it easy.